Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. PCLN NVDA TSLA NFLX CMG. So PCLN pulling back further after the rejection from the daily middle Bollinger Band. At this point, the bulls have to form a higher low compared to 1864 and then a higher high by breaking the high of this recent high of 1928 in order to shift this momentum back, because we did lose the daily higher low pattern. That being said, we do have earnings approaching, so earnings are going to be the catalyst where we either see a bull break or a bear break from this current position. So on the weekly time frame, we're right in the middle of key ranges. Bull break, and we're looking back to all-time high. Bear break, we're looking down to 1806 and 1787. So it all depends on that, and we're looking at about three trading days until earnings are upon us. So not much opportunity, not much more positioning going to go on, in my opinion, and we'll have to see how the market reacts to those earnings. NVDA, very healthy consolidation at this point, a potential bull flag on the daily time frame, holding the exponential supports and pulling back in a healthy manner. At this point, the low is support of 203.65. If that level does break, then the bears will take over in the short term, and if that level can hold, we'll be looking for continuation. So tech sector, going to see a little upside tomorrow if Apple bulls can hold on to this reaction to earnings, and that can only help NVDA bulls, which do have some correlation to the tech sector. Weekly time frame for NVDA, upper Bollinger Band 206.26. Bulls trying to close the week over that level to be in breakout mode, and we're just below it right now where we stand. So still certainly possible with a green day tomorrow to close over the weekly upper Bollinger Band. Doesn't really make a huge difference either way, but after closing above it 3 weeks in a row, the bulls would prefer to stay over that level. Tesla bearish reaction to earnings. As soon as we dumped below $300, that was a clear bear entry on a day trade. Bulls did buy the dip, and we closed with an indecision candlestick, which would normally favor the bulls, but we rejected from the lower Bollinger Band resistance at the high of the day. We're going to be testing that level again tomorrow, and the bulls have to break over and close over the lower Bollinger Band. 308.69 is resistance, and the gap to fill is 320.26. So the bears are certainly still in control, and the weekly time frame has now lost the higher low pattern. This break of 303.13 is significant because it now has, it's the lowest price we've seen since all the way back in April. Not many stocks are doing that. So we leveled out and broke support, and now we're looking down at 292.63 and then down to 250, or the gap fill at 282. Netflix on the daily time frame, bulls closing strong. It was the only of the big 5 tech names that were green on my screen today. And we have the middle Bollinger Band support continuing to hold. It's ascending rapidly and driving the price up with it. We've got resistance at 199.44, 200 psychological, and 201.10 as the bulls are looking to see a break of 201.10 to be looking right back at the all-time high. So the weekly time frame is a bull flag, still favoring the bulls as they hold those exponential supports and try to see continuation from where we stand. But overall, keep closing above the middle Bollinger Band, Netflix bulls in control, and a break of 195.22 would be a clear bear break, because that would give us our high, low, lower high, and then a lower low. So we are in a drawn-out equilibrium pattern where we currently stand, with a range of 195.22 to 201.10. CMG bulls showing up in a big way. Had a rumor about McDonald's maybe buying them out. Either way, we saw a volume spike on the 5-minute time frame that was very unusual in the middle of the day, and then shortly after that, rumor came out and the bulls started to break out. So we closed strong over the first exponential resistance. We do have a little higher low and a higher high now. If we get over 284, we start filling the gap back to the upside, and 295, previous support, now resistance, would be the next target. But we do need to be cautious because this bounce is just an hourly oversold bounce, and it is likely to set a lower high, and we're just patiently waiting for that lower high to form if looking for a bearish entry. Overall, though, bulls have short-term momentum with the close at the high. Weekly time frame is a bullish reversal candlestick, and we'll have to test exponential resistances next week if the bulls want to try and confirm this reversal weekly candlestick. So that's where we stand as we go into tomorrow, keeping an eye on NVDA bulls and Netflix bulls, which are the strongest on this list. Everybody else is dealing with Tesla dealing with the gap down, CMG gap down on earnings, and PCLN gap down in correlation to EXPE earnings. So I hope you have a good rest of your week, and we'll see you over the weekend.